Good day Forex trader. Your USD Forex signal, bearish flag points to more downside. There is a likelihood that it will continue falling as bears target the next key support at 1.0745. Bearish view. Sell the Euro USD pair and set a take profit at 1.074. Add a stop loss at 1.100. Timeline, 1 day. Bullish view. Set a buy stop at 1.0932 and a take profit at 1.1050. Add a stop loss at 1.0770. The Euro USD pair has been under intense pressure in the past few weeks as the ongoing unraveling of the euro continues. It is trading at 1.0855, which is about 5.5% below the highest level this year. Euro sell-off. The euro has been in a strong bearish trend against key currencies in the past few months. It has fallen to the lowest point since January 2015 against the Swiss franc. It has also crashed to the lowest point since July 2017 against the Canadian dollar and June 2016 against the British pound. The sell-off of the Euro USD is mostly because the European Union is currently exposed to the ongoing crisis in Ukraine. European companies like Renault, BASF, and Mercedes-Benz have been hurt harder than their American peers. At the same time, the region will be affected as the crisis in Russia leads to more supply chain challenges in the region. Most importantly, the region is seeing higher gas prices than in other places because of their over-reliance on the Russian market. Therefore, the main concern among investors is that of stagflation, which happens when a period of high inflation is accompanied by slow economic growth. This situation will then put the ECB in a bind about its monetary policy, since an aggressive policy could lead to a recession. The Euro USD will react mildly to the latest Eurozone GDP numbers by Eurostat. The impact of these numbers will be a bit mild since the second reading are usually not all that different from the first one. The initial prediction was that the economy expanded by 4.6% in the fourth quarter while the employment change rose to 2.4%. The pair will also react to new developments in Ukraine. Euro USD forecast. The Euro USD pair has been in a strong bearish trend in the past few weeks. The sell-off gained steam when the pair moved below the previous YTD low of 1.1125. In the past few days, the pair has dropped below the 25-day moving averages. It has also moved between the pivot point and the support of the standard pivot points. The pair also seems to be forming a bearish flag pattern, which is usually a warning sign. Therefore, there is a likelihood that it will continue falling as bears target the next key support at 1.0745, which is along the first support of the standard pivot points. Gbp Usd Forex signal, strongly bearish. The price is hitting new 15-month lows. Today's Gbp USD signals. Risk 0.75%. Trades may only be entered between 8 a.m. and 5 p.m. London time today. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3079 or $1.3005. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3141. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote last Thursday that we were seeing a clear and flat wide-ranging consolidation between $1.3458 and $1.3273. I thought it was very likely that the price would remain within this range over the day and that it may be worthwhile entering a trade from a bearish reversal very close to $1.3458 even if the level was not quite reached. The half number at $1.3450 could also be good. This was a very good call as the price has fallen strongly ever since that day's high, as non-safe haven European currencies such as the British pound and the euro continue to get hammered over the war in Ukraine, partly due to the economic fallout over the sanctions against Russia and energy supply issues, and partly due to the fear of a full-scale war in Europe between NATO and Russia breaking out. This saw the price fall yesterday to a new 15-month low, along with the Euro/USD currency pair. It is very hard to see how this pair could have a meaningful upday unless there was a realistic prospect of a peace agreement emerging, which seems very unlikely. Russia demanded yesterday that Ukraine agree to severe limitations on its sovereignty, and the Ukrainian government is in no mood to accept such dictates. Similar limitations were successfully imposed on Finland in the wake of World War II by the Soviet Union, but the situation with Ukraine is quite different. For these reasons, I see another down day or a consolidation as by far the most likely outcomes for this pair, so any long trades taken should only be scalps, while the best opportunities are likely to be short trades. A bearish reversal from the resistance level at $1.3141 would be an ideal setup for a short trade entry. Aud USD Forex signal, break and retest signals rebound. A retest of last week's high of 0.7440 cannot be ruled out. Bullish view. Buy the AUD USD pair and set a take profit at 0.7440. Add a stop loss at 0.7250. Timeline, 2 days. Bearish view. Set a sell stop at 0.7290 and a take profit at 0.7200. Add a stop loss at 0.7360. The AUD-USD pair retreated in the overnight session as demand for US dollar and other safe havens rose amid the crisis in Ukraine. It is trading at 0.7335, which was the lowest level since Friday last week. The price is about 1.4% below the highest level this week. Risk-off sentiment. The Australian dollar has been in a strong bullish trend in the past few days. This trend was mostly because of the performance of key commodities like gold, copper, and iron ore as the crisis in Ukraine continues. Indeed, the US dollar index has jumped to the highest level in more than 13 years. The performance of key commodities is important for the Australian dollar because of the vast amount of commodities that the country exports. It sells commodities like natural oil, copper, and iron ore, pushing many analysts to call it a commodity currency. The AUD-USD declined on Monday and during the Asian session as demand for US dollars rose. In times of crisis, investors believe that the US dollar is a safe haven. The CBOE-VIX index, which is often seen as a measure of volatility, rose by over 6% on Monday. Meanwhile, there is a likelihood that the RBA and the Federal Reserve will embrace a more hawkish tone in a bid to fight inflation. Recent data showed that Australian inflation jumped by more than 3.5% while that of the US rose by over 7.5%. With the cost of most items rising, there is a possibility that the two banks will start hiking rates this year. The Fed is actually expected to start moving next week. Still, it is unlikely that these moves by the Fed and RBA will have an impact on rising inflation. AUD USD Forecast. The 4-hour chart shows that the AUD-USD pair has been in a strong bullish trend recently because of the rising commodity prices. It soared by about 6.8% from the lowest level this year to the highest point on Friday. The spectacular rally ended on Monday as the pair started a sell-off. On the 4-hour chart, it is approaching the key support at 0.7313, which was the highest level on January 13. It remains slightly above the 25-day and 50-day moving averages. A closer look shows that the pair seems to be doing a break and retest pattern, which is a bullish sign. Therefore, a retest of last week's high of 0.7440 cannot be ruled out.